There's a crew of people out there, deficit house, slugging it out, making sure Democrats wake up. Now, where I think it's interesting, and this is where I'd like you to speak, I want to make sure I give you credit for this, because this is the greatest bumper sticker yet to be made. I despise the end of Fed crew, not because they have a good point or a bad point, but because they won't listen to anything beyond their little end the Fed, right? But you came up with a miraculous bridge between common sense and conspiracy called MEND the Fed. Yes. And the way you did that was pure genius. I mean, it takes a genius to come up with something so simple.
Well, thanks.
Can you talk a little bit about your stance on the Federal Reserve and how they can direct some of the thoughts that you have as it pertains to that?
Sure. Steve, I'll say I don't look at myself and my views on the Fed as genius in any way. Maybe it's a reflection of sort of the deficit in historical perspective that makes it look that way to you. I was a law professor toiling away, critical of Alan Greenspan in the 1990s, critical of Bill Clinton's deregulation of Wall Street, including gutting the Glass-Steagall Act and deregulating derivatives. And, I think I was treated very much like a sort of a Chicken Little, that the sky is falling and people weren't paying much attention. And while the bubble kept growing, what I did was I started to focus much more on the historical experience of central banking and to take a look at how the Fed conducted itself in the 1930s and 1940s, where the Fed engaged in direct lending to Main Street, to actually to small businesses and medium-sized businesses through the 12 regional Federal Reserve banks. Congress had authorized the Fed to do so, and the Fed, I think they were authorized to make up to $280 million in loans to not to banks, but to regular industrial corporations, businesses, partnerships, for instance, but Main Street businesses. And at the same time, we had an enormous infrastructure bank. We didn't call it an infrastructure bank. It was called the Reconstruction Finance Corporation. It was actually created in the final year or two of President Herbert Hoover. And Roosevelt, when he was running against Hoover in 1932, said that the way the Reconstruction Finance Corporation was being operated was a trickle-down approach, and he wanted a bottom-up approach. So under Hoover, this revolving fund, this Reconstruction Finance Corporation, was bailing out big banks, big insurance companies, and big railroads. And it's an interesting parallel to 2008, 2009, where the TARP program, the Troubled Asset Relief Program, was bailing out big banks, big insurance companies, and instead of railroads, of course, it was the big automakers. And Roosevelt wanted to redirect that Reconstruction Finance Corporation to help the Main Street economy, and he did just that. Over the course of 25 years, the Reconstruction Finance Corporation essentially paid for so much of the infrastructure building of the New Deal in World War II, from major seaports and airports to major tunnels and bridges and roads and highways, but also financing school teacher salaries in Chicago and environmental projects and the the Tennessee Valley Authority, the Rural Electrification Administration. Many of these programs were a result of this kind of creative financing. A lot of the New Deal and World War II and post-World War II was deficit spending, no doubt about it. But an awful lot of it also was the creative policies of the central bank, the Federal Reserve, and this enormous infrastructure bank. And when, I guess it's back in 2011, I believe, when the Occupy Wall Street movement was growing, I took part in the Occupy Los Angeles at the time. And I just taught a course, a workshop, I guess you could call it, on the Federal Reserve and Wall Street. And that Occupy encampment had an awful lot of those End the Fed posters and folks who just wanted to completely abolish the Fed. And that's where I came up with, no, let's not end the Fed, let's mend the Fed. Let's make it a people's Fed. Let's make it one that the governing structure of the Fed is much different. It's not controlled just by the big banks, but the governance more reflects society's diverse interests, and the actual policies of the Fed should also be policies that help build a bottom-up recovery, a real strong foundation for the economy, and not just trickle down helping big Wall Street interests. And right around the same time, I got a call from Senator Bernie Sanders' office, and Bernie was putting together an advisory committee on reforming the Fed, and I joined up on that committee. And it was an interesting committee. It included people like Joe Stiglitz and Jamie Galbraith and Robert Reich and a number of other real progressives, true progressives. And that committee had suggested some governance changes to the Fed, and Bernie introduced legislation to tweak it a little bit, at least make it a little bit less captured by the big banks. That legislation, unfortunately, didn't go anywhere. So, I think this needs to be the agenda for progressives moving forward. Certainly, the insights of modern monetary theory is very important, and I think that should be part of the agenda. But by the same token, the central bank plays such a crucial role, and it is such a flawed central bank that we must talk about reforming it.